Good morning from London. I'm Anna Edwards alongside Lizzy and Kriti Gupta joins us today from Berlin. We're an hour away from the opening trade. Here's what you need to know. Germany's Conservatives win the federal election, with Chancellor Olaf Scholz's party suffering its worst defeat since the Second World War. CDU leader Friedrich Merz says he'll form a coalition by Easter. Hopes of higher spending in Berlin push the euro higher, while DAX futures are in the green. Stay with us for more of the Market Open. Plus, Donald Trump's top national security advisors declined to describe Russia as the aggressor in the Ukraine war. Volodymyr Zelenskiy says he'll step down as Ukraine's president if it guarantees peace and NATO membership.
Well, Anna, checking in on these markets, and it appears that the euro is celebrating Merz's election victory here. We have DAX futures firing on all cylinders, and indeed more broadly, Euro Stoxx 50 futures pointing to gains this morning, adding to gains previously of these expectations of market-friendly reforms. Gold, meanwhile, has slipped off the all-time highs, but Brent there trading at $74 a barrel. The countdown to the opening trade starts right now.
We ran a very tough election campaign. Nevertheless, this election campaign was really necessary. Also in the debate about the important and major issues of our country, about economic policy, migration, foreign and security policy, and internal security. But now we will talk to each other, and the most important thing is to reestablish a viable government in Germany as quickly as possible.
A change in government afoot in Germany, married, by the way, with the worst defeat since World War II for the SPD. That is, of course, Olaf Scholz's party, but there is a very much a regime change right here in Berlin. Anna, Lizzy, we are, of course, seeing this, witnessing this. We had a very, very fast ramp up to this snap election. We heard right there from CDU and CSU leader Friedrich Merz that this is, of course, the time when we're going to see real policy changes. That being said, what does that timeline actually look like, given that we're talking about things like a debt break, we're talking about things like military spending, we're talking about things like immigration, and really trying to kind of swerve the economic impact of all that at a time when Germany, the core of Europe, is underperforming not only its peers in Europe, but underperforming the entire world. This, of course, the pain and the gain, and not so much gain, I should say, that comes with being a cyclically based economy. Can this new regime, Anna, actually deal with this and really amend the issue?
Yeah, Kriti, a lot of pressure on the new government then to come together pretty quickly. Lizzy, we heard from Friedrich Merz there talking about getting this done soon. In other comments, he was saying it could be done by Easter. I mean, that's just under 2 months away. Is that soon enough? Is that the level of urgency that the markets are looking for here, or that the world is looking for? As he said, the world doesn't stand still and wait for Germany to get its house in order. So a lot at stake here. We've heard from members of the CDU, CSU about their focus on the economy and immigration policy.
Yeah, and the size of the coalition's majority going to matter crucially. Of course, Kriti mentioned the outperformance of the AfD in these elections. They could veto any loosening of the debt break. That could mean that you don't get enough defence spending as much as Donald Trump wants. That could risk a US-EU trade war. So there is a lot happening here. The AfD as well may have only come in second now, but what are their prospects down the line? Alice Weidel clearly got her eyes on the next election, as has J.D. Vance, given his comments at the Munich Security Conference.
Right, and yes, Alice Weidel saying we will hunt them down, talking about the rivals, the CDU, and suggesting that they will go for first place the next time around. We have years to go until that could possibly happen, of course. At least that's how things stand right now. Interesting, Kriti, to me that we heard from President Trump, and he congratulated Friedrich Merz on his victory, and I haven't seen yet too much Americans weighing in on what a coalition looks like. I'm sure there are many thoughts on that in Washington.
There absolutely is. But look, a lot of the problems that the United States government is dealing with are very similar to the problems that are showing up right here in Germany. Immigration is going to be a key one, specifically how it folds into the economics. And we should remember and remind ourselves, remind our global audience that Friedrich Merz is, of course, the party leader for the CDU-CSU alliance. But he's also, of course, inheriting that party from none other than Angela Merkel, who had a very different immigration stance. And I think that really speaks to this idea that you're seeing that Lizzy had mentioned about the kind of rise of the far right and really highlighting the immigration issue and how it may take a toll on the resources of the country. At least that's the narrative, or has been the narrative, on the campaign trail. The relationship with Washington, though, is crucial. And you heard that from Friedrich Merz talking about this in the elephant round, saying we need to fix our economy so we can, quote, get independence from the United States. Fighting words from the future leader of Germany.
Yes, really interesting. And in terms of how the markets are interpreting all of this, then, let's show DAX futures. They're higher, off their earlier highs, but still substantially higher. And the euro is higher, up by 0.5%. It does seem, then, Lizzy, as if the market is focusing on, well, we might only have two parties that need to agree to get a coalition. Maybe the CDU will be a little right of centre, as it often has been, and therefore that's more market friendly. Focusing on those things rather than the expectations of fiscal stimulus through a reform of the debt brake. Because as you point out, if you add together the AfD seats and Die Linke, they do have the potential to be that blocking minority. They get 34% of the seats. And so that could be something that perhaps in the market's thinking starts to dawn.
Yes, but perhaps what is being celebrated in the market is that the centre held here, and also the fact that the BFW had its weakness, lower than that 5% threshold. They would have wanted, for example, tax rises. And Kriti, I think that that's so important, because this is what's going to fuel the market-friendly sentiment until, hopefully, there is a coalition with a sizable majority formed.
Absolutely. I mean, this is crucial here as well, because I think the headline number is simply that perhaps the markets are maybe a little bit more excited. But we should remind our global audience that the DAX has been outperforming for something like 6 weeks now. It has had a monster run, and a lot of that is less to do with the German politics and more to do with the expectation of defense spending. So what has been the Achilles heel of Germany's corporate space is actually its big benefactor right now, and that so many of the European defense companies are headquartered right here in Germany, are an core German economics as well. We should also mention from the euro, has been that a little bit of an election overhang as well, not to mention the tariff threat. And so there is a market positioning story here as well, where so many of the euro shorts are being removed from this market. And that's not even beginning to talk about how the geopolitics play into all of this.
Of course, that debt brake question crucial to the future of defence spending, which is crucial to the future of the war in Ukraine. And lots of developments over the weekend. We had, Zelenskiy rejecting Washington's demand for this $500 billion deal to give Washington a cut of Ukraine's mineral wealth. Today, of course, the third-year marker of the war. Zelenskyy offering to step down in exchange for peace and Ukraine's NATO membership. I think that is a really clever move. It's calling Donald Trump's bluff, because Trump's been calling him a dictator, but it shows, or this is what Zelenskyy appears to be trying to show, that is not the problem. This war is about sovereignty, which crucially was not mentioned, or we don't expect will be mentioned, in the US resolution to be proposed today at the UN. Putin would never agree to Ukraine's accession to NATO, as the US Defence Secretary Pete Hegseth already said at the Munich Security Conference. And this is exactly what Zelenskyy is trying to spell out by making this offer to resign. Yeah, I mean,
Zelenskyy is trying to get a security guarantee out of what the US is presenting as an economic deal. And so the two are not seeing eye to eye on how this mineral deal would go down. We're waiting for further news on what support Europe will offer to Ukraine and what support or what spending Europe will agree to when it comes to the defence sector. So it's interesting, with that in mind, that we have a headline across the Bloomberg terminal says the EU Commission is stepping up its support for Ukraine's energy security. We'll watch that with interest. Part of perhaps some set-piece events, Kriti, that we might see today, world leaders gathering in Kyiv, and plenty of diplomacy around this subject expected this week and in the weeks ahead.
Absolutely. And we should mention, I mean, right here in Berlin, this all feeds into the story that's happening here. We've covered it from the election standpoint. But remember, Anna, Lizzy, and of course to our global audience, 93% of Germany's LNG imports come from the United States. Also, the United States has a massive military presence in Germany, something Donald Trump on the campaign trail had talked about removing altogether. So these are all going to be themes that factor into the transatlantic alliance between the United States, between the EU, between the UK as well, and of course, certainly right here in Germany.
Let's talk about some of the other things that are coming up on today's programming then. Unpacking the German election. We'll certainly be doing that from a number of angles. We'll be joined by Yari Stern, Goldman Sachs chief European economist. What are his expectations around the debt brake, around fiscal spending? All of that certainly very much in focus. We'll be joined by Maximilian Julia, who is Deutsche Bank Research European Equity Head. We'll also speak to Tu Nguyen, Jacques Delors Centre Deputy Director, and elsewhere in other news, we will be dealing with some corporate earnings stories as well. We'll be joined by the Bank of Ireland's CEO, Miles O'Grady, Thomas Hassler, the Sika CEO, which has recently bought a business in Germany and increased its exposure to that country, will be with us. And to talk about defence, Esther Sabatino, IISS Research Associate.
So plenty coming up on the programme. Meanwhile, this week, lots of economic data to digest. In Germany, we'll have the IFO data later this morning. Tomorrow, we'll have US consumer confidence numbers. Wednesday, the Nvidia earnings, definitely one to watch in the market. Thursday, US GDP and durable goods numbers. And then Friday, German CPI and US PCE data, of course, the Fed's preferred inflation gauge. And we did have all of that eco data last week out of the US, Anna. Kind of disappointing, but also the rising inflation expectations, somewhat worrying for the market and weighing on US stocks on Friday.
Right, so that's something we'll watch. Some of the macro indicators we get this week from Germany, from the United States. There's plenty of that. There's plenty of this diplomacy, a lot of European leaders. We know that the French president, the UK prime minister, the foreign affairs representative for the EU, all of them will be making their way to the United States to talk to President Trump or his representatives about what's happening in Ukraine and defence in Europe. And then, of course, Kriti, on the earnings side of things, we'll get numbers out of Nvidia. And this is interesting in the context of that story on Friday around Microsoft, suggesting that at least one analyst has done some numbers that tell them that Microsoft is pulling back a little, just at the margins, on some of the deals it was perhaps expected to do on data centres.
We're coming full circle on the AI CapEx spend here, because usually when we think of tech companies, we think of them as growth companies at the end of the day. But just given they've been sitting on so much cash, billions and trillions of cash, a lot of that coming from, of course, the hangover from the COVID-19 pandemic, the massive gains in the stock market, they have to have somewhere to deploy it. It has turned into from a growth story to a CapEx story. So it's no surprise here that they're pulling back just a little bit at a time when the markets perhaps aren't rewarding the AI spend to the same extent, Anna, that they were maybe 6 months ago.
Indeed, and we will look ahead to those Nvidia earnings. But let's get to what else you need to know to start your day. Pope Francis remains in a critical condition for a second day as he continues to battle severe pneumonia. The Vatican says the 88-year-old pontiff is still receiving high-flow oxygen in order to help with his breathing. Some blood tests show an initial mild renal failure, which is currently under control. The Vatican says the Pope continues to be alert and well-oriented. According to a report from TD Cowen, Microsoft has cancelled leases for a substantial amount of data centre capacity in the US, totalling a couple of hundred megawatts, a move that may reflect concerns about whether it's building more AI computing than it'll need. Microsoft has reiterated its spending target of $80 billion on AI data centres this fiscal year, but has declined to comment on the cancelled leases. And the Trump administration again taking aim at China with a series of moves, including a memorandum to curb Chinese spending on US tech, energy and strategic sectors, as well as proposed fees on Chinese-built ships. Taken together, the steps amount to the most sweeping, forceful actions targeting Beijing of Trump's second term. They could complicate a deal to reduce China's trade surplus with the US that the president has indicated he wants to forge. So interesting developments there on China, Anna. And I think you get the sense that Trump is in such a hurry to end the war in Ukraine that because he wants to turn his focus to China, and that is certainly going to be something that will be worrying Beijing.
Yes, although there does seem to be the ability in the White House right now to run policies on many different fronts all at the same time, and so we are bombarded with headlines around tariffs, around China, around the relationship there, and as you say, around the war in Ukraine. Thinking about what's going on in China, I was also taken by some of the writing we've been doing about the PBOC, suggesting we're not getting quite the rate cuts that we'd anticipated there because the currency is very much more in focus. And I thought about our conversations last week about whether there's going to try to be some concerted effort to devalue the dollar and wondered where that leaves the yuan. No doubt we'll hear more about that from the PBOC.
Indeed. And of course, this question of whether the dollar has peaked, feeding back into the euro story, and how much benefit there will actually be off the back of this German election.
OK, coming up, we'll get back to the corporate news reporting as well. Prosus plans its biggest deal to date after agreeing a €4.1 billion takeover of JustEatTakeaway.com. We'll have the details. Plus, more deals news with Italy's oilfield services company Saipem nearing an agreement to merge with Norway's Subsea 7. We'll check on that stock at the open. Up next, back to the big story. Germany's Friedrich Merz is set to become the next German Chancellor. We will talk markets and economics in that context in our next conversation. If you have any questions, if you want to get involved in any of these conversations, please do. IB plus BBTV Go. This is Bloomberg.
Unfortunately, at this point, we're still in the world of speculation when it comes to possible and potential coalitions. As long as it's completely impossible to predict who will have coalition talks, the future of a minister of an outgoing government is also impossible to predict.
Your Kukis, the German finance minister, speaking to Kriti in Berlin after the election results last night. Traders are hoping that Germany's election outcome will see a pivot towards increased spending and reforms that could reboot the stagnant economy. Are their hopes too high? We'll dive into some of that detail shortly. Let's get some market response with Bloomberg's Valerie Teitel. Valerie.
Anna, the markets are liking this certainty around a clear winner and maybe the likelihood we can get a government formed sooner rather than later. We've seen the DAX futures react quite positively to this news, up some 0.9%. The euro is also reacting very positively in FX space. We're up 0.5% on the euro-dollar pair. If we could flip on and show that real quick. We're trading above the 105 handle, just barely above the 105 handle. And Anna, that's important because we've tested this 105 handle around 3 times so far this year and have failed to sustain meaningfully above 105. So that's a key figure to watch. If you flip on again and we just check on the 100-day moving average, because this is another level that the euro is testing. The 100-day moving average is at 105.40. So if we break through that, that could mean we are on the verge of a sustained breakout in euro strength on that move.
Valerie, thank you very much, Valerie Teitel, with the latest market moves. Let's bring into the conversation Yari Stern, Chief European Economist at Goldman Sachs. Yari, really good to have you and your insights with us this morning. So we're thinking about the German economy, and there does seem, I mean, broadly around Europe, we're getting a sort of risk-on sentiment in markets as a result of some of the details that Valerie talked about there. Should we focus more, though, on the potential for AfD and De Linke together to act as a kind of veto that could block some of the fiscal spending plans that maybe a government will come forward with? Or are we getting ahead of ourselves with that thought?
Well, I think it's a complicated election outcome. So on the one hand, there's a clear mandate for the Conservatives to lead the next government. A coalition, a two-way coalition with the Social Democrats is possible. That should allow for relatively quick coalition agreements. And I think there's enough overlap on a number of policies related to energy, maybe immigration, that should be helpful from an economic perspective. But at the same time, as you say, the far right and far left potentially have a blocking minority and therefore could stop any constitutional reform which would be needed to really unlock significant amount of money, either via reform of the debt brake or via a new special vehicle for military spending. And so at the end of the day, we think it complicates the fiscal outlook. It's still possible we'll get something on fiscal policy, but I think it's going to take some time and it's going to be more complicated than without a blocking minority.
Yes, I mean, it does seem a little... I am I'm probably getting too far ahead of myself here because we haven't got a government yet. And so to talk about what threats they might face maybe is a little complicated. But it does seem important to think about whether they will be able to get their policies through and important if there is this ability to veto. I mean, where does that leave the ability of Germany to up spending on defence then, Yari? I was reading one analysis yesterday that said, look, they could declare some sort of emergency as they did post-pandemic and try and put aside the debt brake in that way. But the bar to do that is really quite high.
Yeah, I think you're absolutely right to focus on this issue, on the blocking minority possibility. There are still some options. You could trigger the escape clause to the debt brake with a simple majority. But the problem is that only frees up money for 1 year in the year that the escape clause is triggered. So it does not really help to build up military spending over a multi-year period. Now, it's still possible that you convince some of the AfD and Linke to support constitutional reform. The blocking minority, of course, is only very slight, so that's feasible. If you look at the vote for the special military fund in 2022, there was some AfD member that supported it, so there's some chance here. And then thirdly, and maybe most importantly, I think all of this raises the chance that we will get some EU-wide approach to raising military spending, because, of course, new EU-wide debt would fall most likely out of the debt brake. And so that is a third option that's possible here.
Okay.
Well, Jari, it's Kriti in Berlin. There is a thought here that although perhaps this kind of the developments out of Ukraine and certainly the United States' stance to Ukraine has loosened the thinking around joint debt, it may not make a substantial difference given that the policy at that point is made at a kind of European level rather than a national level. To what extent would the prospect of joint debt, perhaps out of Brussels, if the Germans get on board, actually trickle in to the German economic performance? What does that relationship look like?
Yeah, no, I mean, that's a great question, that we think the so-called multipliers, the growth effects from higher military spending in Europe are actually relatively small, because a lot of the military spending typically is spent on imports, particularly if it is for military equipment. So we think near term, an increase in military spending would only have relatively small effects on European growth, and it would only really be over time, as the European defense industry is built out and built to scale, that you could see more significant growth effects from higher military spending.
Well, Jari, what kind of timeline are you putting on that? I want to focus in on Germany specifically. Anna was talking about the debt break there. What does that timeline actually look like when we're hearing Friedrich Merz talk about getting a government together in about 2 months' time? What is the lag there then in terms of actually getting the spending to have an effect on the economy?
Yeah, I think it all means that we're unlikely to see a significant boost from more spending this year. I think it's really more something for 26, 27, where we could see more spending. And that's, at the end of the day, why we think growth this year is going to remain pretty weak. The economy is still facing a whole bunch of headwinds from high energy prices, from trade tensions, competition with China. And so we think this is unlikely to turn around very quickly. And our forecast for the German economy is still for flat growth this year.
And Valerie pointed to this, Jari. She asked the question, can euro-dollar sustain above 105? Part of the answer to that is whether the dollar's peaked. Where are you at on that?
Yeah, I think you're seeing some support to the euro here because you did not get a three-way coalition. We will get some agreement, a bit more quickly. At the same time, we talked about the blocking minority. I think that is something that will need to be seen over coming days, how the different parties position on that. And then, of course, the other big factor here is still U.S. trade policy and tariffs. We are still seeing a lot of uncertainty on that front, and we would expect that to still weigh on the euro in coming days and weeks.
And indeed, we could see more of that uncertainty if they can't get to where they need to get on defence spending. Really good to talk to you, Jari Stern, Chief European Economist at Goldman Sachs. Thanks for joining us around the table this morning. So as we say, we are looking at euro-dollar higher off the back of this result. And at 105 is where we are at the moment. DAX futures higher, Euro Stoxx 50 futures higher. The market's celebrating what we have so far.
The market is celebrating a little, yes. I mean, DAX futures were up a little more than this earlier, but they are still up by 1%. There is still, it seems, some further upside to go on this German result. And I suppose, big picture, the market is getting what the market thought it would get on Friday. And so maybe that's why we go a little bit higher here. Certainly, the AfD didn't do any better than the market was in a risk-on perspective, fearing that it might.
Exactly. Well, coming up, we're going to discuss more. Germany's Conservative leader, Friedrich Merz, laying out plans to form a coalition government by Easter. Is that soon enough? We'll have more on what it could look like next. So do stay with us. This is Bloomberg.
Welcome back. Monday morning, we have the results of the German election to factor into markets this morning. 7:30 here in London, 8:30 if you are in Berlin, Frankfurt or many places beyond. This is the picture then for European equity markets. So the futures for the CAC 40 aren't not terribly stunning. We should really have the German futures in there, shouldn't we? We are up by just under 1% on German futures. So DAX futures are higher this morning, 0.8% higher. We'll look for that at the market open. S&P futures, interestingly, also a little bit higher, as are NASDAQ futures. On bond markets, though, we can show you what's going on with Germany. And we do see European yields rising. Certainly at the 10-year horizon, I can see the European yield story up by 2 basis points or so. So not stunning large moves here, but we do see some movement higher in terms of the yield story. And if we look at the German curve, we can see that yields are higher across the curve. Not very much at the short end, though. So 2-year yields up really hardly at all. But the further you go down the curve, the more we do see a little bit of a push higher in those yields. Let's head back to Berlin and Kriti Gupta.
Well, and a regime change, as you said, in Germany, and one that, of course, comes with a stellar defeat over at the SPD. That, of course, is Olaf Scholz's party. I'm joined now by Chad Thomas, Bloomberg's executive editor for Europe, joins me here. Here, of course, has been heading up our coverage out of Berlin. I think the question is now what? We saw these results coming about a mile away. We've been talking about this leadership change from Olaf Scholz to potentially Friedrich Merz. It was confirmed last night. Where do we go from here in terms of developing a coalition?
Yeah, hi, Kriti. If you are Friedrich Merz, you've got the result that you were hoping for last night. Given where we were at in the polling, this was about as good as it could get. He has the potential to form a two-party coalition with the Social Democrats. And the Social Democrats are a party that the Christian Democrats have been in government with before, so they know one another and they know how to form a coalition with one another. The challenge for Friedrich Merz at the same time is he only has that one option, and that means that the Social Democrats are likely to try to extract as much as they can from him in terms of ministries, in terms of policy, in order to agree to join his government. So on the one hand, he has a clear path to power, but he only has that one path.
Let's talk about that policy overlap there between the CDU, CSU alliance, and then, of course, the SPDs. They disagree on a lot. The debt brake, of course, was a real sticking point for the SPD, as we know. Where do they align?
I think some of the things that they align on is being willing to spend more money when it comes to defense. So that is clearly an area where they say we need to help Ukraine. We need to have more money to do that. They don't want to significantly cut social spending. The Social Democrats don't want to cut social spending at all. I think that is something that Friedrich Merz would be a little bit more open to. But those are some of the areas where they align. One of the things that I'll be watching closely in terms of where they disagree is on things like sending more weaponry to Ukraine, things like the Taurus missiles. This is something that the Social Democrats under Olaf Scholz have vehemently opposed. Friedrich Merz says he wants to do it. So as they negotiate this agreement, these are some of the things that they'll have to be looking at very closely.
This is something that is a sticking point, to your point, from Germany and the EU. The joint debt story came up, of course, in our interview with your cookies as well. We know that they've been slow to get on board there. Now you have Friedrich Merz kind of competing for leadership in Europe, not just with Germany, but with Ursula von der Leyen as well. What is that relationship between Berlin and Brussels?
Yeah, it'll be interesting to see how that plays out because Friedrich Merz, in some ways you would say that Europe has been a little bit leaderless with Germany's problems domestically, France's problems domestically, and now everyone is competing to take on that role. And I think Friedrich Merz is someone who will say, I am the one to do that. I'm leading the biggest economy in the EU. So one of the things he did say is that the first place he's going to go to when he becomes chancellor, he's going to go to Paris and he's going to go to Warsaw, and he wants to have a deeper relationship with both of those partners. I was in Warsaw a couple of months back, and they were, honestly, when you talk to people privately, they were really hoping Friedrich Merz would win this election because they thought he was someone who would really step up. They had been frustrated by Olaf Scholz and the fact that they felt that he wasn't really taking on that role to help drive the European projects. So we'll be watching closely how this develops with Merz, obviously, in the next weeks and months.
So not even chancellor yet, and already making his mark on international politics, which really is a bit of a harbinger for maybe what is to come. Let's talk a little bit about the domestic policy as well. We know he, of course, is from the CDU, CSU alliance, similar to Angela Merkel, but with a very different immigration stance. We know that was the key voting issue in this time around. How much attention do we need to pay to the rise of the AfD in that context, given that both the CDU, CSU, and the SPD have ruled out any sort of partnership with them?
Yeah, so the AfD obviously is already affecting policy. Everybody among the mainstream parties, the Christian Democrats in particular, have shifted to the right on immigration. It was the top thing that people voted on. When you looked at the exit polling, it was immigration and it was the economy. And the party that scored highest on those two things was the Christian Democrats. That is why they won the election. He knows that, so he's going to have to deliver immigration reform. He's going to have to deliver on security in Germany in order to remain in power. So that is something we'll be watching very closely.
Chad Thomas, of course, our executive editor for Europe, leading our coverage of the German election right here out of Berlin, Lizzy. And we ended on that comment in terms of immigration. It's crucial because we should also remind our global audience that Germany is one of the top 3 countries alongside the United States and Saudi Arabia in terms of immigration per capita figures. So, of course, not only a key voting issue here in Germany, but internationally as well.
All right, Kriti Gupta in Berlin, and we will be coming back to the German story, but I just want to flip our focus now to corporate earnings. Of course, this morning we've had results from Bank of Ireland dropping across the terminal, a slight beat on net interest income for the full year, a slight miss on underlying profit, and Bank of Ireland seeing 2025 net interest income above €3.25 billion. Shares up 18% year to date. We'll see how they perform at the market open. But we can go now live to Dublin and speak to Myles O'Grady, Bank of Ireland CEO. Really good to talk to you this morning, Myles. Just take us through your outlook for the year ahead. I see your guidance on net interest margin. Are you guiding the market expectations higher?
Good morning, Kriti. We've had a strong and profitable 2024. We've completed now year 2 of a 3-year strategy. We're meeting or beating all of our targets. The macroeconomic backdrop remains very supportive, and our business model is structurally well positioned to benefit from this. So that translates into a growing loan book, material increase in wealth assets. They're up 19% last year, and of course, cost efficiency remains key. That translates into very strong profitability, 1.9 billion, and a return on equity is 16.8%. So a strong year, and as we enter year 3, we expect another strong performance, and we've given some guidance on that in terms of outlook. Again, expecting a strong performance overall.
And what impact are interest rates and the ECB easing monetary policy going to have on your profits in the year ahead?
Well, certainly, if I look at the factors that are driving growth for Bank of Ireland, very much underpinned by the demand for credit in Ireland. That's been a feature. Private sector credit up more than 3% last year. So the big factor in growth for 25 will be a combination of a growing loan book, a growing deposit book, and of course those wealth assets growing as well. And when we set out our targets, of course, we expect that as inflation comes down, the ECB terminal rate gravitates towards 2% out to 27. In that environment, we feel confident and comfortable regarding our earning profile. We've talked about a return on equity target of being above 17% by 27.
Myles, very good to speak to you. It's Anna in the studio. I wonder if you could talk to me about the risks for the business. So clearly there's a lot of moving parts, a lot of assumptions you're having to make. Global trade tensions is something we talk about on a daily basis. What are your worries for the year ahead, Myles?
Well, certainly the economic backdrop remains supportive. In Ireland, we expect that cumulative GDP out over the next 3 years will be in the region of 12%. That's expected to outperform the euro area. So that's a fundamental building block. And of course, like many organisations like Bank of Ireland, we have a careful eye on the implications for global trade. I think that both the domestic economy in Ireland and indeed our export sector, which is proving to be resilient, is proving to be strong. But of course, we have a careful eye on how those international developments may play out over time. That would be one area, certainly a focus for us.
OK, so that's one area that you're certainly watching. Can I ask about your digitisation efforts and the way that they are playing out in the business? Because for this sector, it does seem as if digitisation and AI and all kinds of technology advancements could hold significant productivity advancements and the like. But I wonder what that does to headcount. So as you digitise the business, what does that mean for headcount at Bank of Ireland?
Well, certainly we have an objective that out over the next number of years, we become a leaner, more efficient organisation. And of course, part of that is the ongoing adoption of digital technology. We've seen great strides in that. Certainly, if I look at our, say as an example, our current account, 79% digital adoption. That's very strong, one of the strongest for a bank like Bank of Ireland in UK and Ireland. And as part, yes, of our objective to deliver efficiency and a leaner organisation, I do expect that our overall FTE, our headcount levels, will be lower than they are today out over the next 3 years.
Miles, just coming back to the Trump effect, do you worry that the president is going to try to reshore the assets of American firms to the detriment of Ireland's role as a kind of multinational hub, to the detriment of Ireland's economy and banks like yours?
Well, certainly it's an area of concern when we think about the implications of trade dislocation across the globe. But certainly from an Ireland perspective, the export sector is performing well. Most sectors last year saw strong growth. Pharma up 18%, technology up 19%. There are certainly risks. But if I look at some of the factors, export, that element of foreign direct investment, that's been built up over 40 years. And of course, in Ireland, we're not producing motor vehicles to export, we're producing medicine. And therefore, I actually regard foreign direct investment as a source of stability for the Irish economy out over the next number of years.
Miles, can I ask you about something else we're seeing as a sort of bit of a talking point, at least within the banking sector? We've seen some banks either moving away from DEI targets or changing the name of DEI targets or trying to talk less about DEI targets, I suppose, is another approach. How are you thinking as a business about the importance or the way that these are going to evolve?
Sana, I see no change in our approach, and one of our strategic pillars is to be a more sustainable business. And of course, that captures DEI. From my perspective, it's very important that we have a workforce that is representative of the customers we serve. And of course, we also know that diversity in its own right is a very good proxy for independence of thinking, which is a good thing to have in a bank like Bank of Ireland. So no change from our perspective in that regard.
OK, and I know I'm talking to a business that had a female CEO for quite a long time. Miles, thank you very much. Thanks for joining us. Miles O'Grady, Bank of Ireland's CEO. Coming up on the programme, we'll stick with the corporate earnings. Well, it is a corporate earnings story. It's also an M&A story. Prosus plans its biggest deal to date after agreeing a €4.1 billion takeover of Just Eat Takeaway.com. Just Eat Takeaway also put some numbers out this morning. We will break down the details next.
We are investing in Just Eat at the right price based on DCF. This is the right price to create a real big global leader.
Wir, die CDU und die CSU, die Union.
We, the CDU and the CSU, the Union, we have won the 2025 federal election. The world out there will not wait for us, and it will not wait for lengthy coalition talks and negotiations either.
Germany's conservative opposition leader Friedrich Merz speaking after winning this weekend's federal election. Let's get a little bit more on how this all affects the markets. Bloomberg's Markets Live strategist Mark Cranfield joining the program this morning. Mark, a pleasure to have you on this historic day for Germany. We're seeing DAX futures just on a tear this morning. The euro seeing a little bit of strength as well. Is it too fast, too early, given that these coalition talks still have a few months to surface? How are the markets thinking about this?
Well, it's understandable to have a huge amount of relief, particularly from a European point of view, especially when you consider the disappointment over the French elections and how the government has been struggling to form a coherent policy in France for so long. There's massive relief that at least Germany looks as though it could move towards forming a government fairly quickly. And that's what investors are really hoping, because the German economy has been struggling. It clearly needs a coordinated approach to try and get it back on track. investors are not so concerned whether it's left-wing or a right-wing group leading it. They just want a government with a clear mandate to get on, to spend money, to restore health in the German economy and give it a sense of direction. And if possible, to raise the debt ceiling so that that could include spending a bit more. That's partly why you're seeing the very long end of the German bond market underperforming today, and equities obviously doing better. But also the stories about the euro as well. And that's a combination of factors. Positioning going in to it was partly short of the euro, so traders have still got an unwinding to do there. They were pessimistic on the prospects for the euro, still thinking that the US dollar was a strong story. So that it still needs to be unwound. We've seen it in a relatively tight range. The dollar's been losing ground gradually in recent weeks against the G10 space, but that's mostly been driven by the yen. Now there's a clear chance for the euro here to catch up, and that will be a powerful combination that would weigh against the US dollar in general. So clearly there's a lot of extrapolating going on, but traders do that best. They like to get excited about these things, and clearly the euro is a potential for a big winner here.
Yeah, and that excitement led to a higher euro this morning. We continue to watch it. Let me ask you about tech earnings. We're looking ahead to Nvidia numbers midweek then, Mark. And this comes at a time where we've seen Chinese tech doing very well and to some degree then decoupling from the United States. Where does that tech theme take us?
Well, this is something that investors haven't really seen for quite a long time. Nvidia was dominating the tech space globally for such a long time. Every time an Nvidia earnings comes along, it's a major event for global markets, not just for the equity space, but it's a big enough stock to be able to have a macro impact as well. And we've seen it several times. Come earnings day, there's a huge swing in Nvidia stock. It has ripple effects across equities and across assets in general. This time around, it's a different story in China. You've got a company like Alibaba, it's had a fantastic rise. It had its own earnings out last week, beat expectations, people getting very excited about the AI story specific to China. And that is the difference this time. Even if Nvidia doesn't excite everybody, the Alibaba story clearly has legs. There's another report today, they're going to invest a lot of money in AI infrastructure. So clearly, there is a chance here that China decouples, led by the big tech names, especially Alibaba. We've got Tencent coming out later in the month as well. It's a very interesting time. Finally, decoupling may actually work.
All right, Mark Cranfield, our Markets Live strategist, we thank you. And you can remember to get all the up-to-date analysis and insight from Mark and the rest of the team by going to MLIV Go on your terminal. Now let's get to stocks to watch with Joe Easton from our equities team. Joe.
Morning, Lizzie. So big news today in the food delivery space as Prosus announces a deal for Just Eat worth around €4 billion. Now, if we look at Just Eat takeaway shares, we can see they haven't recovered from this post-pandemic slump we saw as the orders dropped off. We can see it down 86% on a 5-year basis, so potentially a good time to be coming in and buying at that stock. And we're going to look for a read-through in the peers, of course, Prosus itself, but also Delivery Hero, Deliveroo in London, and maybe even HelloFresh in Germany. Keep an eye on all of those. Potentially we'll see positivity feeding through into those stocks this morning. Then the other big bit of M&A is news of a merger between Saipem and Subsea. Now, this is in the oil services sector, and it does look to be an all-share combination of these companies. We can see Saipem has been the underperforming stock. Again, probably a good time to be buying into that one. And also worth noting that Eni also owns a 20% stake of Saipem, so potentially we could see all of those three stocks moving around today. Then in terms of the shipping stocks, a massive drop overnight in Shanghai freight futures as Trump looks to put some fees on ships that were made in China, attempting to clamp down on the Chinese dominance of maritime industry, according to Trump. And we're going to have a look at some of the shipping stocks here in Europe today, including Maersk, of course, also Hapag-Lloyd, and also Kuehne+Nagel and DSV. Those are the big ones to keep an eye on today in the early trading. Then in terms of the analyst ratings, we could see some weakness in the Eutelsat in satellites as Goldman cuts it to sell. Santander has an outperform at KBW, and one just hitting the wires, Ryan Mattel up to buy at UBS with a massive new street high price target post the German election. That one could be higher in Frankfurt this morning.
Joe, thank you very much. Our equities reporter Joe Easton, of course, with some of the M&A stories that we're tracking this morning, as well as some of the corporate earnings and broker upgrades and downgrades. Kriti, all things German very much in focus today, and DAX futures regaining some of their earlier momentum and up by 1.1%, I see this morning.
Yeah, a massive move here, of course, and there's this maybe twofold. You kind of heard Mark Cranfield talking to on one side of this, simply being this is a little bit of a relief rally, that the election outcome is exactly what the markets were expecting. The CDU, CSU alliance, the SPD perhaps coming in some sort of coalition as well. The other piece of it is going to be that defense piece as well, because if you do have this leadership question out of the SPD, Boris Pistorius, who's the current Minister of Defense, perhaps playing a bigger role in government in Germany, an even bigger role. Does that change the agenda as well? That's going to have a direct effect in so many of the German corporates. On the other hand, you have a lot of that euro strength as well. That might be a little bit of a kind of short positioning that is starting to close. That's something Mark Cranfield referenced as well. I'm curious, though, Anna, if how much of this rally is actually tied to the election or a continuation of what you've seen in the last couple of weeks.
Yeah, is this something new? Is this, yeah, we've got the German election outcome, of course, but we've been tracking European equities as they've outperformed US ones since the beginning of the year. Of course, last week we saw a bit of a stumble on that, Lizzy. There could be some interesting individual standout movers. Joe was taking us through some of those. We've had news flow around Prosus, of course. Just Eat Takeaway could be a really big climber, and that could take the rest of the sector like Deliveroo higher.
Yeah, and Delivery Hero as well. Just on the point about the German DAX, you know, a lot of it's internationally exposed. So if you try and keep an eye on the domestic German stocks, you know, we look at the auto stocks, the parts makers, the chemicals names, the finance names, real estate, and Rheinmetall, as Joe pointed out, raised to buy at UBS. So there are also other stories at play when it comes to them as well.
Yeah, as ever, when we're dealing with domestic politics, sometimes the smaller caps are of interest. So the MDAX, of course, will be in focus for us. OK, we will bring you the market open. It is Monday, the 24th of February. We have the initial results of the German election. Coalition talks are still ahead. We wait for, well, perhaps just under 2 months for a coalition to be put together. Will it be sooner than that? We will certainly be looking for that. The market is pleased that it's got that kind of timescale ahead, it would seem, or at least that only 2 coalition partners might be enough to put together a government that lasts in Germany. We'll bring you the opening trade features, including in Germany, point higher this morning. This is Bloomberg. Welcome back to the opening trade. A few minutes to go until European opening trading takes place. And we have the European futures picture to factor in the results of the German elections, of course. More on that in just a moment with Kriti. But this is what we have in terms of Friday's session. And the European and US stories do look a bit detached from each other right now. So maybe this is of real limited use to us. But interesting to cast our minds back to Friday, because it does seem a long time ago. We made gains on the European equity markets, and that's what we see here in the white. The blue, though, is the US session. And the US session was weighed down by shifting expectations around US tech. We certainly reined in expectations there. We had US consumer data, other data out of the United States, all looking a bit lackluster, Kriti. And all of that added up to some real negativity, down by more than 2% on the Nasdaq, for example. But we've had a German election, and Europe, even before the results of the German election, was kind of going its own way. And so, Kriti, futures don't really reflect Friday in the US.
No, not really. In fact, the margin of the future story between the DAX and the Eurostoxx 50 is enormous. Look at this, almost over 1%. The FTSE 100 flat right now. The Eurostoxx 50 only higher by 0.3%. How much of this is a debt story? How much of this is an election story? Simply a kind of euro-dollar story as well, Lizzy.
Yeah, in terms of some of the individual stocks we're watching at the open, Kriti, in Amsterdam, we have the news that Prosus is to buy Just Eat Takeaway in this $4.3 billion cash deal. So we keep an eye on Deliveroo and Delivery Hero. We also have the news that Italy's Saipem and Subsea have agreed in principle to create an oil services company combined. So we watch both of those companies, and keep an eye on the European vaccine stocks after researchers discovered a new coronavirus in bats that can enter cells using the same receptor as COVID-19. seen. Anna, let's get to the open.
OK, yeah, busy dealing with the results of the German election, so we don't have time to explore that one in any more detail right now. But let's get to the market open and see how markets are digesting the results of the German election. And we have a lot of news flow from Germany, of course, to price in. That doesn't mean necessarily we get an open on the Xetra DAX any earlier than we normally do. So we might be waiting a couple of minutes for that one to happen. But we've got the Stock 600 just opening into green territory. The FTSE 100 up 0.1%. Actually, no, faltering now, just flat. But it really wasn't in London or in Paris or in Madrid that we're expecting to see any of the big moves today. We are expecting to see some considerable upside coming through on the German market, and we watch for that. The CAC 40's actually down by 0.2%. So we do have a bit of well, not much corporate earnings news, but we certainly have some corporate news flow, Lizzie, in the shape of M&A stories to keep us busy while we wait, perhaps, for the DAX to open.
Yes, well, we are still waiting for Deliveroo and Delivery Hero to open. But as we look at these markets sectorally at the moment, given that we're still waiting for the DAX, you've got about half of sectors in positive territory. Utilities leading the gains, higher 0.4%. Basic resources at the bottom of the basket, down 0.6% as things stand. Just looking for some of these individual movers, though, I did mention the European vaccine stocks, and you've got GSK higher 1.4%, Novo Nordisk higher 1.5%. Could this be to do with that news of a new coronavirus? Keeping an eye on those, but there is a lot of red across the sector as well, including for Roche and for Sanofi and for Bavarian Nordic as well.
Yeah, there's a lot to digest when it comes to Germany, so we're waiting for the DAX to open up, of course. We do see opening prices on some of the individual names over in Germany, so that's of interest. I can see that Commerzbank is going higher, for example, just 1% or so. So none of the moves I see right now to the upside seem substantial. Interesting, Siemens Energy, I see that one as quite a substantial loser this morning, so we'll continue to track that. We've been tracking anything that's connected to data centres and AI, of course, after we saw some really interesting news lines from one of the brokers around Microsoft on that front during Friday's session. So we continue to watch that. But Schneider Electric looks to be Siemens Energy is one of the fallers I can see in Germany. Schneider Electric over in Paris is also under pressure, down by 2.4%.
Yeah, we continue to wait for the DAX to open this morning. We have BASF shares up 2%. We are still waiting, though, for the big car names, the likes of Volkswagen and Mercedes, to give us a read on the market reaction to this German election result.
Yeah, absolutely. Maybe the reaction will just be in the big picture moves rather than the individual names, but we'll certainly watch for both. Let us talk now to Maximilian Euler, who is the head of European Equity and Cross-Asset Strategy at Deutsche Bank Research, and joins us now. Maximilian, we're waiting for the DAX to open. There is an expectation it goes higher. Does it make sense for you that we seem to be approaching the result of the German election from a stocks perspective as risk on? Yes, we might get to a coalition pretty quickly versus previous German expectation, but there is this possibility that any change to the debt brake could be vetoed by a blocking minority. So how risk on are you feeling for German stocks this morning?
Yeah, so really a mixed set of results, I would say. As you mentioned, I think a two-party government, that's extremely likely, and I think that's an improvement incrementally versus what we had. We had a three-party government, so that's better, and I think the market should be happy to see that. We see more reforms more quickly. However, we have this two-thirds majority not for those companies, not for the centrist parties. And the problem is, I think we should be discussing this, is also interesting from a sector perspective, is that we have more than one-third with the far right and the far left. So, the far right, they are opposing support for the Ukraine. So they wouldn't be very supportive on a new defense fund or more defense spending if that's going towards the Ukraine. And then on the other hand, we have the leftists, and they actually want to spend less on defense. So I'm very curious on how the defense stocks are going to perform this morning or over the next couple of weeks. I think there'll be a lot of question marks on how possible is it that Germany is going to have a debt brake change? I think less possible than we thought maybe a week ago. So I'm not completely sure that the market will hold up from what we've seen in the futures.
Well, Max, as we've been speaking, the DAX has opened its higher 0.7% currently, welcoming this result. But I have to ask you, Friedrich Merz has been talking about the urgency to get a coalition done. He's also given us a sense that maybe it'll take 2 months. How long is too long if this bullishness is to last?
Yeah, so 2 months is kind of the average we've usually seen. He's been saying we should have one before Easter. I think the chance of that is pretty high. I think it could actually be a little bit quicker than that, because the SPD and the CDU, they've repeatedly been saying we know there is an urgency to get to a coalition agreement. And apart from the differences that we've seen over the campaigning, actually the rest of the parties, the rest of the people in the parties, they're actually agreeing on a lot of things. So I think we will be on track to meet market expectation. The exact date, I don't know, but I think there's a good chance that we'll have a coalition early April.
Well, Max, I just want to go over to Kriti now, because she's got a breakdown of how these German markets are faring at the open. Kriti.
Yeah, Lizzy, as you said, the DAX is officially open. It is as expected. You are seeing a lot of breadth when it comes to this market. Your biggest index contributor, though, is ultimately in those defense stocks. And this was kind of expected with the narrative we've seen in the last 6 weeks or so. Let's start from the macro and work our way through sector by sector. When it comes to the broader German indexes, of course, you are seeing green on the screen. I'm looking at a DAX that's flying higher by over 1%. This is enormous when it comes to some of these moves. And it is important as well, not just to look at the headline factor, the large cap factor, but the trickle down as well. And that's going to be really important. Let's also talk about this from a kind of mid cap and small cap perspective, because if you are talking about massive fiscal spend, the small cap sector matters. It's higher by about 1.5%. The smaller you go, the bigger the impact. How much of that is related to the election read-through? I want to go sector by sector here. So let's go to the autos immediately, because when I'm looking at the percentage change, names like BMW immediately come to mind. I'm seeing a move here about 2%. Mercedes-Benz as well, higher by 1.4%. Volkswagen, of course, especially in light of a lot of those layoffs, higher by about 1.7% as well. Even Porsche higher by about 2%. Let's talk about some of the other German majors, because defense is a very key piece of this as well. And Rheinmetall already flying off the handle here by about 3%. You also see a bid into the tech space. SAP higher by 0.5%. Deutsche Bank higher by 1.2%. Not in on the risk rally, though, is Adidas. And this is going to be crucial. It feels like the consumer sector of Germany, alongside the energy sector, really falling behind and not taking part in the risk rally this morning. About, we'll call it lower by about 0.1% for Adidas. A quick check on the bond market as well, because there's German Bund yields are crucial, as are the euro. We know the euro has already been flying, but the German Bund yields starting to see a little bit of change. The 2-year basically pairing that opening move. And then if you go further out into the curve, starting to see maybe a marginal, emphasis on marginal, tick higher. Max, I want to bring you back into the conversation here, because we are, of course, seeing this widespread rally when it comes to the German stock market. How much of this, though, as Anna pointed out, is an election standpoint, as opposed to maybe a little bit of short covering when it comes to some of these cross-asset moves?
Yeah, I think it's a bit of a move after the setback that we've seen late last week, right? So it's actually pretty normal behavior ahead of elections, more uncertainty, and then a little bit markets down. And then after the elections, it actually also happened in the US and other places, a bit of a recovery. So I'm not really sure that the election results are super constructive for markets. We think it's incrementally better than what we've seen, but we've been extremely bullish on markets into the year, and our DAX target was 23,000, and we're almost there. So I think a lot of this positive sentiment is already being priced in. So I would say elections, yes, short term, today's move is because of elections, because of a relief that we don't have a three-party government, but I don't think that the German elections is a game changer. Politics is one of, I think, 5 factors that are super important for markets looking forward. This factor increasingly being priced in.
Max, well, one of the kind of European playbooks that we've seen in terms of sector outperformance, I'm going to argue this is in the States as well, is fiscal spend in particular sectors. I'll give you an example. In the United States, the chip sector went gangbusters over in the U.S. simply because they got those federal grants from the Biden administration. We've seen similar things happen in France, in Spain, in Italy as well. Is that perhaps the expectation that, yes, there's the politics piece, but that the fiscal spend may be coming strongly into the defense sector of Germany? How much room does that have to grow?
So we do think that there'll be more spending on defense. We think part of GDP will be 2.5% spending on defense, so increase in spending. On the other sectors, I think there's actually less wiggle room than we might have hoped for a week ago, because the centrist parties, they don't have a two-thirds majority. That means they can't really change the debt brake unless they make big concessions to the far right or far left. So I actually don't think that as a result of the recession of the elections, we'll see a lot more fiscal spending. I think that's actually a little bit of a disappointment from what we've been seeing yesterday night. So I don't think that we'll see a lot more spending on chips, etc. What we probably are going to see is a relief on energy costs. There's a big agreement that energy costs need to come down in Germany. So, if you take off the tax that's increasing the energy cost, that'd be about 7% less energy cost. That'd be pretty positive for energy-intensive industries. I think the result that we got this morning is positive. For the other sectors, I don't yet see the big impacts. I think we'll have a lot more clarity once we have the coalition agreement. Then we will know what, for example, the policies will be on real estate. The CDU doesn't want any rent controls. That'd be very favorable for real estate. The SPD is in favor of rent controls. They want to prolong what we already have, so that'd be pretty negative for real estate. We can go over all those sectors. I think we'll have a lot more detail in about 6 to 7 weeks when we have the coalition agreement. For now, it's too early to make conclusions from yesterday's result on sectors.
Maximilian, if we broaden the conversation a little around European stocks more broadly, I caught up this morning with the CEO of Prosus, Fabrizio Bloisi, and he was talking about how he thinks that European tech companies are undervalued. He's made a bid for a play for a European tech company this morning. I just wonder whether M&A that lifts the value of European stocks is something that you are looking to. Is that a theme that you're going to be playing in 2025?
Yeah, so lots of things that really still speaking in favor of European equities, right? They've been outperforming 10%. I think that can continue, not at the momentum that we've seen in the first weeks. M&A is certainly one of the drivers, and we think that will pick up. But if you look at, and why is that going up? Because valuations are still pretty attractive, right? If you look at the valuation differences, US versus Europe, they're still very attractive, especially if you compare that to rates also. Rates differential enormous. We see great earnings momentum. We've seen 8% beats versus expectation in European earnings. And economic data, and we've seen that on Friday, are also pretty stable, right? So we have basically flat PMIs on Friday in Europe and 3 points lower PMIs versus expectations in the US. So this Europe versus US play is still working, favorable for Europe and favorable also in absolute terms for Europe. And I think two more things that could drive this rally a little bit further could be a ceasefire in Ukraine. On this one, unfortunately, we have very little certainty. And also, don't forget that in 2 weeks from now, we have the NPC in China. And they will be discussing potential stimuli for the economy. Now, if that is perceived as being better than expected, that'd be another favorable driver for Europe. So yes, M&A is one part of that, but just one part of many, I think, positive drivers for European equities.
Well, staying on China, Maximilian, of course, over the weekend we had Donald Trump upping his threat of tariffs on Beijing. What if China can't sell its products into the US and so instead floods the European market? Surely that would undercut some of the European companies we're watching on the Stock 600.
Yeah, I mean, that's certainly a risk. I think we've had that discussion now since Donald Trump's first term, right? Exactly that. More tariffs mean that we'll have more Chinese imports into Europe. Didn't really happen as bad as people expected. It's a little bit of a threat, maybe driving inflation lower, which again would be positive for the rates differential. So driving inflation lower would mean more cuts. So I'm not convinced that this is across industries. We, of course, have this discussion in the auto industry, but also in the auto industry, it's not yet a game changer for earnings or for sales of European automakers in Europe. So I'm actually a lot less concerned than the current market perception of this topic.
Max, when it comes to ultimately the bull case for Europe, I'm going to zoom this out really enormously. What is the ultimate driving factor here? Is it a trade negotiation with the United States? Is it a tariff negotiation or overcapacity story with China? Or does it still come back down to the domestic politics?
I think domestic politics is one part. And I think you need three things for U.S. investors to step back into Europe. One is more political stability. I think we're moving in the right direction. We now have a budget in place in France. We now have a German government. Again, we don't have the 2/3 majority that I was hoping for, but at least we have a stable government. I think that government is here to stay for the next 4 years, so that should be good. That part, I would say, check. increasingly priced in. I think those Chinese stimuli that we just mentioned, that would be the second big driver, especially from a US perspective. I don't really see US investors yet being invested in Europe. I think the rally that we've seen mostly came from European investors. So China would be number 2. And then from the US perspective, and that's actually pretty interesting because the perception is pretty different on the continent versus what we hear from US investors. The ceasefire in Ukraine from a European perspective is perceived as less important. From a US perspective, pretty important, because that kind of seems to imply lower uncertainty in Europe and for Europe. So I think those are the 3 big things. On tariffs, we've been of the opinion that they are less hurtful for Europe. And I think part of why the PMIs last week, Friday, were so negative in the US is that people increasingly realize that tariffs are not just a problem for Europe, they're also a problem for the US. Imagine you're a US company and you need to now get your supplies 25% higher, which is not good news. If you're a consumer, imports are getting a lot more expensive. So I think that's a negative for both sides of the ocean. And I think markets are waking up to this.
Maximilian, thank you very much. Maximilian Euler, Head of European Equity and Cross-Asset Strategy at Deutsche Bank Research. Thank you very much for joining us this Monday, 24th of February. Let's get a check on some of the individual stocks that are on the move. Joe Easton has a briefing. Joe.
So a lot of action in these food delivery stocks this morning, Anna, particularly a lot of trading coming through in the pre-market auction on Just Eat Takeaway, but we did have a volatility halt on that one, struggling to get a price given. We're expecting to see a big jump in that one, but take a look at Prosus coming down more than 7.5% now. They will be paying out around 4 billion euros, 4.3 billion euros on that deal, and they already own a big stake in Delivery Hero, so that one coming up, potentially that will fuel a partnership between them, and we're seeing a feed through on Deliveroo here in London as well. Remember, a lot of these stocks beaten down post-pandemic, of course, so potentially a cut price deal, but a lot of action in those shares, and we'll wait to get a price on Just Eat Takeaway at the open. Then, in terms of the other M&A story, it was over in Italy and also Norway as well. We've got this deal coming through. Saipem and Subsea looking to combine in an all-share transaction, and Eni in Italy also has a slice in that as well because they own a bit of Saipem. But we're not seeing a huge move. One of my colleagues did point out it's not a massive premium on that, but we are seeing, nonetheless, a bit of a move higher on those stocks. Then in terms of electrification, this one very interesting. We're seeing Schneider Electric dropping almost 5%. It's a massive company, of course. And also Siemens Energy. Now there's a report from an analyst over at TD Cowen saying that Microsoft seems to be scaling back on their data center investment, their capex, and that seems to be weighing on the electrification stocks here in Europe today. Keep an eye on those. But we are seeing significant losses. Schneider Electric, the biggest points decline now on that report around Microsoft capex this morning.
Joe, thank you very much. Joe Easton from our equities team joining us there with a look at some of those stocks on the move. We are monitoring a press conference that the AfD is currently running. We are looking now at pictures of one of the co-chairs, Tino Tripala. We've also been hearing from the AfD's other co-chair, that's Alice Weidel, talking about their willingness to move on debt rules or lack of it. Alice Weidel then repeating the AfD's opposition to loosening debt rules, and also repeating the opposition to a special defence fund. Really important to think about what the AfD will or will not vote for because of the ability of the AfD and De Linke to form some kind of blocking minority on some important policies ahead. We'll get more on Germany shortly. This is Bloomberg.
Let's get back to the corporate reporting now. The Swiss construction and materials company Sika reporting full-year results that met expectations alongside an upbeat outlook for the year. I'm pleased to say we're joined now by Thomas Hasler, CEO over at Sika, and he is with us around the table. Good to have you with us, Thomas. Let's start with your outlook. So it is generally rosy, but one gloomy spot is for European autos, which of course matters for Germany, a market we're talking a lot about this morning. Just talk me through why you're braced for a difficult year ahead there.
I think the circumstances haven't changed overnight, and the automotive industry in Europe is challenged by confusion about the future direction. That the transformation to electric is stalling, and so we have a very low, let's say, build rate, a very low consumer confidence that is also this year indicating low low volumes in Europe especially.
And Thomas, I know that you've increased your exposure to the German market recently with some of the M&A that you've been doing, so with MBCC buying that German business. So as a business that operates in Germany as well as lots of other countries around the world, is it important to you that you get government formed quickly? Is that the kind of certainty that business is looking for in Germany?
Our German business is significant. It's the third largest country after the US and China. It's the locomotive of our business, like it is the locomotive of Europe, I would say. We have a strong organization that is ready for the year, but with the election, I think we see some clarity that hopefully will stimulate also that some of the backlog will be released.
And you're set to benefit from the reconstruction of Ukraine, I see. How are you planning ahead for that? There's such a big opportunity if we can get peace in the country.
Yes, we are active in the Ukraine. It's a rather small organization there. The bigger impact of peace in Ukraine is probably on Europe itself. The confidence, let's say the insecurity that is still all around would fade and probably stimulate, again, consumer confidence. The outlook would be more positive. It's more in Europe than in the Ukraine. But we are in the Ukraine active, and definitely there would be much more construction taking place.
Thomas, you have a third of your... You mentioned that Germany is the third largest business behind the US and China. I think a third of your sales come from the Americas, at least. What is your expectation about the US construction sector then? Because we have, there's a lot of people excited perhaps by growth, but on the other hand, there could be tariffs making certain things more expensive. How are you looking ahead to 2025 in the US?
I just came back from Vegas, from the largest fair, construction fair in Vegas, and the atmosphere is euphoric, it's super positive. The infrastructure spend is expected to further rise. So I would say very, very positive. On the other hand, you hear constantly, we have so many projects, but we can't execute because we are missing labor. So this is the flip side, that eventually a lot of what is announced cannot be put in place because of missing labor. So we have here a very positive industry, at the same time a very limited, challenged industry.
Well, Thomas, if you were in Vegas, are you going to bet more on the US to try and get round the tariff threat from Donald Trump? Are you going to invest in more business in the US?
Actually, we have been spending a lot capex to the US in the last years, and we are going to continue. We have almost an autonomous situation there. We produce in the US for the US, we buy locally. So we are investing into growth, and the US market is growing steadily also in the past, and we expect a little bit more in the future. So we are going to also allocate capex according to the growth potential.
Let me ask you about China then. That's the one part of the world we have perhaps not touched on. What are your expectations for China? How much visibility do you have there? We're expecting perhaps some more fiscal boost in China, but then the geopolitics gets complicated.
Yeah, China is complicated, and we also expect that it will be still this year challenged. I mean, this fiscal boost that you mentioned have not turned into actually economical confidence of consumers, and I think this is the lagging factor. There's a lot of money, but it is safe put aside. We have a continuous, let's say, decrease in residential housing prices, which is indicative of the consumer confidence still not re-established. And that has for us an impact, and so therefore we are a bit more, let's say, cautious about China in the near term.
Thomas, thank you very much. Thank you for joining us. Thomas Hassler, the Sika CEO. Lizzy, we have some movement on Just Eat Takeaway.
It's more than movement, Anna. Just Eat shares up 53%. They were up 55% at one stage. This off the back of the news that Prosus is to buy Just Eat in this $4.3 billion cash deal. You're also seeing a little bit of a gain for Deliveroo and Delivery Hero, but woof, what a move for Just Eat shares this morning. We're going to get back to the geopolitics, though, later in the programme. The EU ramping up support for Ukraine as President Zelenskyy says he'd step down in exchange for peace. We'll have more on the third anniversary of Russia's full-scale invasion next. Stay with us. This is Bloomberg. Welcome back to the opening trade. 30 minutes into today's session, and they might have been late to open, but boy, did they deliver. We're looking at Just Eat shares up 53% this morning on the news that Process is to buy Just Eat Takeaway in this $4.3 billion cash deal. It is the tech investor's biggest deal today as it pursues new growth opportunities. And you're also seeing a bit of a spillover effect for the likes of Deliveroo. They're up 4%. Delivery Hero also up 4.2%. So those shares really gaining off the back of that M&A news this morning, Anna.
Yeah, so a bit of M&A news flow. Overall, though, markets seem to be fading the optimism around the German election. The DAX now up by just 0.25%. Let's pivot our thoughts to geopolitics this morning. Ukraine's president has said he is prepared to step down in exchange for NATO membership for his country. Volodymyr Zelenskiy was speaking in Kyiv yesterday ahead of the third anniversary of Russia's full-scale invasion today.
To achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Let's get more with Bloomberg's Russia government editor, Greg Sullivan, who joins us now. There's plenty of news flow over the weekend. Then, Greg, we've heard from Volodymyr Zelensky, as we just said there. We heard from plenty of US voices failing to mention Russia as the aggressor in the war in Ukraine. It's clear that Trump's taken a real turn against Ukraine. Where have we got to on the negotiations? A lot seems to focus on the potential for a mineral deal and whether that will include any security guarantees.
Absolutely. I mean, it's clear that Zelenskyy's comments are, in fact, a response in many ways to Trump labeling him a dictator and all the pressure that the U.S. administration is putting onto him. But they're interesting in another way because they do point to a fundamental issue here that will be the sticking point for any negotiations, and that is the security guarantees that are needed to stop the fighting and keep it stopped. Zelensky himself said that that would be NATO membership in these comments, but Russia has ruled out NATO troops on Ukrainian land. The U.S. has also ruled out putting boots on the ground. So that really leaves a big issue here, which is how does Ukraine deter Russia and what kind of viable security guarantee is going to come? And right now, that's just not clear as we see.
There is talk, at least from some of the major European kind of countries who do have a little bit more military capability, like the UK, France, for example, even Germany, of talks of a reassurance force, as they're starting to call it. Conversations happening in D.C. this week with Emmanuel Macron and, of course, Keir Starmer as well. Is that enough for Europe to get itself off the sidelines?
Well, that's the real question. We've seen Europe really rushing to try to coordinate a response and get themselves together. As you said, there are these negotiations about a reassurance force. There's also talks about a defense package to provide aid to Kyiv in roughly the form of 20 billion euros. The timeline for that remains a bit uncertain still, but we do know that the Europeans have called an emergency meeting on March 6th to discuss aid to Kyiv and the bloc's own security. So they really are trying to step up and provide that security, but it's unclear if Europe alone can fill a gap should the U.S. pull back. But again, that is a major issue in how any kind of resolution to this conflict comes to be.
And meanwhile, what comes next for the US-Russia talks? We're waiting for this Trump-Putin meeting, Greg.
Well, that's also interesting. Over the weekend, we saw that Russian President Vladimir Putin appointed Kirill Dmitriev as he's the head of the Russian Sovereign Wealth Fund as a negotiator for foreign economic cooperation. He was involved in the first round of negotiations in Riyadh, but what's interesting here is it does appear that Putin is stepping up and putting a businessman envoy to kind of meet Trump's own businessman envoy, so potentially a bit of creative approach to negotiations with the U.S. But as for now, the two sides are trying to come up with a way to hold more talks between officials from each country. Trump obviously still wants that leaders summit, but it's not necessarily in Putin's interest for that to happen fast as he makes battlefield gains. So that's the next question, is if and when a potential leaders summit could be.
OK, Greg Sullivan, Bloomberg's Russia government editor. We thank you for that update. And I want to continue this conversation now. The European Union rushing to secure a $20 billion euro package of military aid for Ukraine. And the bloc's going to hold its emergency summit on March the 6th, following the about turn that Greg was talking about in US policy on the war. Let's speak now to Esther Sabatino, who's a research associate for defence and military analysis over at the International Institute for Strategic Studies. Really good to have you with us, Esther. Do you see the EU's defence structures supplanting NATO in time?
This is a very prominent question. Let's say that European countries are trying to go towards that direction, but we can also see that they are really struggling and lagging behind. I would say that there is the clear perception that they now have to act, but when it comes to devoting the right resources to that, that is still problematic. If you look at the NATO expenses, for example, for the last year, NATO EU members accounted for only 1/3 of the expenses that occurred at the NATO level. And so, of course, that already replies to your question on how much Europeans can speed up and really be at the level necessary to provide defense in Europe.
I suppose as we factor in the AfD's performance in the German election overnight, if you're going to integrate European defence, how do you prevent what's happening in NATO happening to this European alliance? You know, one US election has upended the world's assumptions about defence. Another German election, for example, could do exactly the same.
We will see also how the coalition government will be formed. But what we can already see is that Germany, at least Friedrich Merz, is really determined to put a further strength to the European projects, and particularly to strengthen defense. We can also see that this is particularly in line with other countries in Eastern Europe, but not only. What will need to be done, I would say, is to find two different types of agreements. On the one hand, you will need to really try to find the political will to eventually also find the right architecture for Europeans to intervene or to provide the security guarantees that are being talked about in the last days. But on the other hand, you will not also need to find the proper way to produce together what European countries are missing. There are already the structures available at the European level. What has been missing so far is the political willingness to really act at speed to increase defense capabilities in Europe. So it's not only something that is dependent on Germany, I would say, but of course it will need to have the agreement of the 27. And this is the biggest problem of the European Union when it comes to defense, because of course it is the combination of the 27 members, the willingness of 27 member states. So actually what could happen and what could also speed up the process would be to have sort of coalitions of the willing inside the EU, or groups of countries that are determined to act at a faster pace in Europe to improve the capabilities of European countries. And if I think about this kind of setting up, the countries that I would say would need to be there would be for sure France, Germany, Italy, Spain. So in a way, the countries that have been promoting defense, but not only, also Poland in this regard is extremely relevant, as we saw in the last years that Poland really increased its defense spending and investment.
Esther, can I ask you about the negotiations from a defence perspective, the negotiations that are taking place around Ukraine? The US administration is offering what it calls economic security guarantees instead of some kind of military guarantee. I wonder if the two can get to the same page? Do you see any way that the Trump administration coming with what looks like a business deal and the Ukrainians wanting security guarantees, can they find common ground?
Funding security guarantees from European countries, we already saw what the reaction from the Russian administrations were. So they already said that they were not willing to accept any presence of NATO members to have these guarantees. So that is already something that is extremely problematic. I would also say that having a security guarantee that is disconnected from the economic agreement as well as from the support of the US would risk up to a certain extent not to provide that certain guarantee that Ukraine is looking for.
Well, Esther, talk to us about then not only the security guarantee in Ukraine, but this is coming at the same time that Donald Trump is talking about removing a military presence, an American military presence, specifically right here in Germany. How does that square with the economic interests of Ukraine? Can they both exist, or is it one or the other?
This is a complex question to answer. So we also saw actually over the weekend that there were some reassurances on the presence at least of US soldiers on Poland territories. And that, of course, it means that Trump is not going to leave 100% the European soil. So up to a certain extent, there will be a sort of guarantee. Of course, the farther west these guarantees are going to be the worst in a way it is to ensure the security guarantees for Ukraine. But I think that now the central of the discussion and of the negotiations would need to be exactly on finding ways to ensure actually that not only Europeans, but also the US, in the way that they will negotiate and agree upon, will be present in Europe to have that security guarantees, apart from economic support that might be needed.
Esther Sabatino, Research Associate at the International Institute for Strategic Studies, we thank you so much for breaking down kind of the geopolitics around the Ukrainian story and where Germany falls into all of that. We thank you so much. As we were speaking to Esther, we've seen the DAX completely pare its opening gains. It had opened over 1%, some of it thinking a little bit of an election risk rally. You are now seeing it flat on the index. Looking under the surface of what is actually moving the DAX, you are seeing quite a bit of movement in the defense sector. That's the part of the market that is continuing to rally right alongside the auto sector as well. Does this change the game in terms of policy there? Where you're seeing the underperformance is in a lot of the growth picture. SAP, Deutsche Bank, Adidas, even some of the consumer-facing stocks, the energy stocks, or even some of the idea that you are starting to see in Infineon, for example, that having a little bit of a read-through and that dragging down the entire index. But when you're looking at Volkswagen, Mercedes, BMW, Porsche, the names on your screen right now, they are continuing to climb. I wonder how much of that is really a function of policy expectations and fiscal spend coming out of this new German government. Coming up on the program, we're going to dive into more of that coverage and the election impact. Stick with us for that conversation. This is Bloomberg.
We can also think about increasing the amount of financing instruments that we have together. We already have quite a few, and we've always been open to increasing those. But what we don't support is to just flat out say we're going to mutualize debt to finance something that is not defined, or something that decision-making stays at the national level, but the financing at the European level, that just creates asymmetries that make no economic or military sense.
The German finance minister there, Jörg Kuki, speaking to me about the prospect of the joint EU debt issuance following the German election. We know this has been a key point when it comes to whether or not Germany wants to basically be responsible for this defense spending. The immediate idea was this is how you raise funds for a lot of the European Union to then, as a whole, invest in defense. But as you heard it there, Jörg Kuki is really kind of reflecting the mood here in Germany, which is if Germany can contribute to it and those defense decisions are made on the national level, why should the funding be bought on an international level at the level of the EU? So he's vouching for the idea of individual projects that can then be funded by individual governments. And that is his argument. But critics of that would say Germany is always slow to come to the table when it comes to kind of these coalition moves, not just domestically, but internationally as well. This was happened in the 90s with the adoption of the euro. Germany was slow to adopt it for these very same concerns. Why should one country be responsible for the whole? And it's that same parallel that's happening now. This is also coming, of course, in the context of when Germany and, of course, Friedrich Merz, the CDU, CSU party leader, due to be the next Chancellor of Germany, is looking to really build and invest and modernize the military while also cutting some of the more domestic costs around energy, immigration, and, of course, some of the wage pressures as well. So there's a lot going on in the German political space, both intrinsically and externally. Let's bring in a true expert, Tu Nguyen, Deputy Director of the Jacques Delors Center and board member of the Civil Society Network European Movement Germany, joins me this morning, too. A pleasure to have you on this program. We're dealing with a lot of kind of news flow and agenda items when it comes to what this new German government wants to accomplish. What do you think is going to be the easiest thing for them to check off this laundry list?
Good morning. From Berlin, I think there is no easy thing to check off the list. We are now, right, the day after the elections. I think the first step will be how to form a coalition that can actually govern and that is stable and efficient and that can come into office quickly. And there will be quite a few diverging points between the CDU and the SPD, which is actually the only politically viable coalition option at this moment. Migration will be a difficult topic. The economy will be a difficult topic. I'm hoping that at least on defense, there will be a quick consensus between the two parties, perhaps even before the coalition comes into place, because this is the most urgent topic that needs to be tackled.
You think there could be a quick consensus on defence, too? Good to see you. Thanks for joining us. What about the view of the AfD and Die Linke, though, and the fact that they might have different views on defence and they could perhaps block a reform of the debt brake if they thought it was going to be used for defence spending?
Indeed, I think this is one of the pressing questions. The way the parliament is now constituted, the CDU, the SPD and the Greens do not have the two-thirds majority to reform the constitutional debt brake, which very much limits the spending of the government, including defense spending. Now the big question is, will they be able to convince the left party, whose votes they will need, to carry either a debt brake reform or to introduce a special fund for defense? And I think this is an open question, will be a very difficult discussion. The left is in favor of a debt brake reform in general, for more investments in infrastructure, in climate and social policies, but they are very opposed to more defense and military spending. So I think this is something that will be a very difficult task for the next chancellor, who is most likely Friedrich Merz.
Good morning, it's Lizzy here in London. I wonder what you expect German policy on Europe is going to look like under Chancellor Friedrich Merz, and whether really he can play the role of leader of Europe.
This is the hope and the expectations on Friedrich Merz and on the next German government. Europe is facing immense challenges, and the previous German government has been somewhat absent in EU policy. And Friedrich Merz has stated his intention to take on leadership. He has, I think, a very clear vision of where he wants to take Europe, and he wants to take on the role for both himself and Germany to shape a united response by Europe to the Russian threat, but also to the policy shifts in the US. And again, I think a lot of this would have depended on whether he has a majority for a stable government. And at least in this respect, the election allow him to have a two-party coalition, or three-party if you want to take the CSU. And I think these are good conditions for him to take on the leadership role that he wants to take on and that everyone is expecting him to take on in Europe.
Let's circle back around to the international aspect of this, given that we still have so many of these threads of the domestic to follow in the weeks and months to come. How does Friedrich Merz's policy agenda square on the international front with the likes of Ursula von der Leyen, given that they have the same roots right here in Germany? Where are the sticking points in that relationship?
Yes, so the interesting aspect of this is that Friedrich Merz hails from the EPP, the European People's Party, the same party from which the European Commission President, Ursula von der Leyen, hails, and which is also the biggest party in the European Parliament, headed by Manfred Weber, also a German conservative. So we have three German conservatives in these three institutions. I think Friedrich Merz also intends very much to take on leadership within the EPP. He has said that he wants to use the majority of EPP leaders in the Council, European Council, to push forward European integration. He has been very vocal also, or influential also, on EPP statements. EPP leaders were in Berlin in January. The question is in how far there will be sticking points between Ursula von der Leyen and Friedrich Merz, because there is, I think, a difference in how they, for example, see climate and the European Green Deal. The European Green Deal was one of the flagship projects by Ursula von der Leyen in her previous term. Friedrich Merz very much campaigned on the necessity to put the economy before climate, and wants to deregulate a lot of the regulation or simplify the regulation, yes. Also roll back the European Green Deal. And I think this might be an issue where there might be differences in opinion between the two.
Okay, and I wonder, so differences of opinion within Germany, but I wonder if this centre-right-led government takes Germany a little closer to the United States. I saw that President Trump congratulated Friedrich Merz on winning, on taking a higher percentage of the votes than anybody else in this German election. How significant is that for the US-German relationship?
Friedrich Merz has also, after the election, been quite clear on the need for the European Union to perhaps become more independent from the US. I think there was a fear that the US administration and the speech by Vice President Vance might support the AfD and might help them in the elections. This we have not seen so much. They have doubled since the last elections, but the polls have been quite steady. Otherwise, I think what is very clear is that we will have a central government, centrist government in Germany. So Friedrich Merz has very much ruled out to form a coalition with the far-right AfD and is now looking to go into talks with the centrist coalition. And I think this is actually a very good outcome of these elections, that this is possible to have a two-party coalition in the center.
OK. Tu, thank you very much. Tu Nguyen, a Deputy Director at the Jacques Delors Centre and board member of the Civil Society Network European Movement Germany. Thank you very much. Well, extensive conversation there about Germany then, Kriti. Meanwhile, a lot of volatility in German stocks.
A lot of volatility. We started at the open higher by over 1%. We are seeing all of those gains completely paired this morning. But I think the nuance here is that we are still seeing some outperformance relative to some of the other European indexes. You're seeing it on your screen right now. The auto sector and the defense sector very much driving what a little rally there is much, much higher. The auto sector certainly on your screen there. The defense sector, Rheinmetall, getting a lot of love this morning on the expectation that that is indeed where we're going to see a lot of the spending push as well. German Bund yields not moving as much, perhaps a little bit of caution given that we are going to be seeing this idea of a debt break or not. And then, of course, the euro strengthening to a 105 handle. Coming up on the program, we are going to have a conversation with the IFO president, Clemens Fuest, on the latest German business climate survey and the outlook after the election. That does it for the opening trade. The Pulse is up next. This is Bloomberg.